guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to swing trade. A lot of people have been blowing me up saying, Carter, how do you trade? You talk about stocks you're buying. You talk about your approach and strategy. So I wanted to make a video starting from zero. If I were going to start over, how would I learn swing trading? What would my new strategies be? So I hope you guys all enjoy it. If you guys are new to the channel and you're like, who is this random guy? My name is Carter. I'm a full-time trader in the stock market and I have been for over 6 years. And with that being said, we do have an amazing school where I teach people my strategies, my approach, my mindset, how I find undervalued stocks and stocks to swing trade. And right now, guys, you guys can use code YouTube for 20% off. And this, guys, one thing I want to be completely clear, today is going to be the last day for the current price in all of these sales. So make sure you guys sign up right now. So let's dive into this here. So if I were going to start swing trading, what would my first thing be? So the first thing that I would do is actually sign up for a stockbroker that offers paper trading. The one that I would choose is Moomoo. It's the one that I've been using for years now, and they're absolutely fantastic. They offer great charting, great scanning, and I'll put them down below for you guys to sign up. You guys can get up to like 20 free stocks just by signing up. But more importantly, what they offer is something called paper trading. Paper trading is using simulated money to practice your strategies and work on things. And during this time here, after I signed up, I would invest into some sort of notebook. You don't need a fancy one. You can do it. You can use a 99-cent notebook from the dollar store, or you can be a little fancy and get like a trading journal like the one that I use. I'll put it down below as well. But the reason why you need a trading journal and paper trading is very simple, is because with documenting your trades, you can see, your weaknesses, you can see your ways to improve, and more importantly, you can actually start working on a checklist. So a checklist is a checklist to determine if you should buy a stock to trade. So we'll talk about pretty much my checklist later in the video, so stay tuned for that, or you guys can fast forward to that. But doing this in paper trading is very, very important, and I would highly recommend doing this from anywhere from 6 months to a year. When I first started trading, I did not paper trade. I funded my account. I funded a Robinhood account. I actually placed my first trade in my college classroom, and it was a very, very exciting time. But I had no idea what I was doing. So in a couple of months, I burned through my money, and I was starting from zero again. But if you really focus on education and just practice, you'll be in a great spot. You can't have the approach that with trading, it's an easy way to get rich quick. You need to invest time. You need to invest time into practicing and working on a strategy. So I would recommend doing this for 6 months to a year. After that time, then you guys can fund your Moomoo account with $100 or $50, something small, so you guys can start practicing, and getting familiar with emotions. So phase 1 is just learning your broker, learning the strategy that you want to use, and phase 2 is building up the emotion side. With trading, a lot of it is actually emotion based. So maybe your friends are telling you to buy stocks. Maybe you're seeing stocks that I talk about, and you may have a little FOMO, or you may be a little confused, or whatever it may be. So why you actually need to start small is because you want to build up your emotion tolerance, so you can only trade stocks that you believe in and that you understand, that follow your strategy. So if I were going to completely start over, I would paper trade for 6 months to a year. During that time, learning as much as I can. I would sign up for my course. Then after I did that, I would fund a Moomoo account with about $100 or $50 and just start slowly trying to grow it. A lot of people think that, if you're trading with $100, you can turn it into 1,000. No, with trading with a small amount of money, you got to have those very, very realistic expectations. So now let's kind of talk about the approach and strategies here that I use and that I love here. So like I said, I use Moomoo. It's the broker that I'm actually using right now. So make sure you guys check them out because they're awesome. So the first thing I always do with my checklist is, one, I want to find a stock on some sort of upward trend. So trends, in my opinion, are the number one thing traders don't look at. Honestly, they'll find a stock on a downward trend and expect it to have a magic reversal, when in reality it's always just better to just go in the trend, right? The trend is like, it's like a river. It's very, very hard to swim upstream. It's a lot easier just to go with the river and go downstream. So with trends here, the first thing I love, because I'm mostly a long trader, so I will buy stocks and sell them at a higher price with the occasional short. Shorting is just betting for the stock to go down in value. You borrow shares from your broker in hopes to, buy them back at a lower price. So, the first thing I look for is a stock on an upward trend. Some short traders will look for one on a downward trend, but I look for one on an upward trend. The next thing I have is support. I need support. So support could be a variety of things. It could be a certain price. It could be an indicator. It could be a variety of things. So for me, I love indicators. I love moving average lines, RSI lines, and I do love MACD lines. Those indicators are the only indicators you'll probably ever need. Anybody that tells you different or that you need a million, it's a recipe for disaster when you have a lot of indicators, because it gets overwhelming. It pretty much clutters your chart, and in my opinion, it doesn't look good, right? So having a couple of indicators that you can just click through and kind of just see the direction of the stock here. So the ones that I have here, this blue one is what we call the 90-day moving average line. It acts as support. You guys can see in the past where it hits it and we get good buying pressure, hits it, good buying pressure. It also acts as resistance. So when the stock is below it, like it is in here, it has tendencies of acting as resistance where it hits it and we get sell off. So if you're going to try to buy a stock, you want to try to buy it above the moving average lines, as close as possible to them. So the main difference between the blue and the red line, it's very simple. The blue is the 90-day, and then the red is the 200-day moving average line. The red is going to act as a harder support, harder resistance. So if you could buy a stock every single time on the red, that's going to be a lot better than the blue. So now that we understand support, because for me, I use moving average lines. That's the support I chose. Some of the times I will use a certain price, if it has like a horizontal stock where it doesn't have a good growth, but it's just more consolidation, then you'll have a lot more price supports. So the next thing I look for is something called the RSI. So the RSI stands for the Relative Strength Index. So this tracks momentum inside the stock here. And you guys can see that we've seen this huge sell-off here, and actually was trading for near and around a 28 at the time. So a 28 historically with most companies is considered an undervalued point for the stock. So one way that you guys can determine that is just look back at previous history. So you guys can see I drew out a yellow line, and what I do is I just want to go back and look at what happened the last time I was trading for that. And you guys can see it actually went from about $79 to $120 in about a month. So now that we understand, a 29 is a historically an undervalued point for this stock. The next thing I do is that I want to make sure I'm not holding during an earnings report. And you guys can see it actually released earnings a couple of days ago, so I'm in the clear for that. Holding during an earnings is a crazy thing, because an earnings is a 50-50 chance to make money. Honestly, some people will say you need to trade earnings. You need to trade earnings. No. Trading in earnings is a 50-50 chance of making money. Sometimes the earnings will beat expectations, and sometimes it won't. In both ways, right, you'll get great buying pressure, but also great selling pressure. So for me, I never want to take that risk. So I would highly recommend not holding during an earnings report. And you guys can see that with this stock here, in the past, you guys can see shortly after an earnings, huge sell-off. With this one, shortly after earnings, a little buying pressure. Shortly after this earnings, selling pressure. So 50-50 chance of making money. So for me, I really don't look at the fundamentals as much when it comes with trading. And the reason why that is here is because, with fundamentals, that's more long-term investing. I will look at, the average price target. I will look at what some analysts rate it. I will also look at some of the the revenues where it has increasing revenues. Stuff like that is very, very, very important here. So, I make sure, that it's not a company going bankrupt, if that makes sense. But I'm not going to place a trade strictly on that. The next thing I look for is a stock with a decent risk and reward. So, if we draw out our moving average lines and we determine the risk and reward, because you want to make sure when you hop in on a position, the risk and reward is there. So you guys can see that if we hopped in here near and around the 200-day moving average line, it offers a very, very good risk and reward if you hopped in on the 200-day moving average line. But with our trade here, we'll actually break it down why our risk and reward wasn't the greatest, but and we still made some money off this. So you guys can see that this is the hourly chart. So each candlestick represents 1 hour of trading. So, a lot of traders, or at least I use this to determine a couple of things. I'll try to find some sort of hourly support. I'll also kind of see the direction of the stock here. So you guys can see that this stock has had a hard time breaking above these moving average lines. So you guys can see it hits it and we get good sell off, hits it and we get good sell off here. But the second that the stock breaks up above these moving average lines in the past here, the stock is squeezed out, right? Even in here where it breaks up above it, squeezes out. So one of the things here that we did is we entered on the breakout of the 90-day moving average line. So the approach was very, very simple, was to see what could happen. Setting our stops just below some old support here, giving a risk and reward of about 2 to 1. So it's not as good, but entering here near and around this 146 area, the stock squeezed its way up and then kind of sold off. One of the things here that I actually did this morning is you guys can see where it kind of flattens out, and this is where I kind of put my stop loss. I wanted to see what would happen if we would just get some buying pressure out of it. It opened up above the 200-day moving average line, which was really good because I thought we were going to get some buying pressure out of it, and it kind of just fell flat, right? So we slowly moved our stop loss up, and as it broke down on this huge candle, we exited the trade near and around this 150 area. So yeah, we only made a couple of dollars, probably near and around 2%. But with trading, it all comes down to base hits, right? We're trying to get in and out of positions. We're not swinging for the fences. And we'll actually show you guys another strategy, another approach here that I do have with one of my trades here. This one here is off of Meta. Now, Meta was a stock that I recently bought for a couple of reasons. You guys can see that it has this really nice trend line. You guys can see it hits it in the past, and this is what we call price support. Or trend support, really. You guys can see it hits it in the past, getting good buying pressure. We had this huge volatile day that, where the whole market sold off a bunch. So we pretty much hopped in near and around this 460 mark. And the reason why is we hopped in here, set our stop loss here. The risk and reward was there. So 460, we had our target price being all the way up here at old resistance, and our stop just right below this trend line. The risk and reward was about 3.4 to 1, which is relatively decent. So using a straight trend line as well as looking at the EMA lines, okay, we know there's going to be some support on the 200, set the stop below it. And the RSI was trading for near around a 30, which was a very undervalued point for the stock. We also know it just released an earnings report. And the thing that I loved about Meta's earnings and kind of why I bought it was because with Meta, they beat expectations. The stock skyrocketed up, and then the whole market sold off back down below the previous price of the earnings, before the earnings. And they beat expectations. Sold off below it, so we bought in, and then what do you know, the next couple of days, great buying pressure, and we're still in on the position, and we're up handsomely on it. So these are very, very simple strategies you guys can do to start trading stocks. If you want to learn more about trading, check out our school. It's absolutely awesome. And this is the last day for the code, the last day for the price. So check that out, and we'll see you guys in the next one. I hope you guys all have an amazing rest of your day, and take care.